Okay, picture this. What if we looked at the entire global economy as a jungle? A jungle where monkeys use leaves as currency and bananas as assets. I know it sounds a little wild, but viewing our incredibly complex financial systems through this lens of primate economics completely strips away the boring jargon. It reveals exactly how money, debt, and these massive global markets actually function on a day-to-day basis.
We have a ton of ground to cover in today's explainer. We're going to start with Section 1, Earning and Borrowing Leaves. Then we'll move right into investing, crypto, and bubbles, explore inflation and supply shocks, and finally, look at surviving the monkey recession. All right, Part 1, Earning and Borrowing Leaves. Let's start at the very beginning of the economic life cycle. So you're out there on the banana farm earning your leaves. And right off the bat, you owe taxes to the monkey government. But here's a massive behavioral pitfall that catches so many people off guard: misunderstanding marginal tax rates. Earning 100,000 leaves and hitting that 22% bracket doesn't mean your entire income gets taxed at 22%. It just doesn't. Yet, this misunderstanding routinely leads to totally irrational economic behaviors. You literally have monkeys turning down extra shifts or promotions because they mistakenly think moving up a tax bracket will leave them with fewer total leaves. In reality, your tax bill is blended across the different tiers, saving you from a whole lot of unnecessary financial panic. Now, eventually, you're going to want to buy your very own banana tree house. And by putting down a 10 to 20% deposit with the Monkey Bank, you aren't just proving you have some skin in the game, you're heavily leveraging your future leaf earning potential. Think about it. You are controlling a massive, expensive asset using only a fraction of your own capital. And you have to appreciate the literal, historical meaning of the word mortgage here. It translates to death pledge. No joke. You are making a 15 to 30-year death pledge to the bank. It's a massive, long-term commitment of your future leverage. And to top it all off, before you even get the keys to that treehouse, you get hit with a flurry of closing fees. We're talking appraisal fees, termite inspections, lawyer fees, title searches. It feels like these fees are swarming you like fleas, but it's all just part of the pledge to secure your spot in the banana real estate market.
But what about smaller, unsecured leverage? Well, monkeys absolutely love to use their leaf cards. But here is the trap, and it's a big one. The compounding nature of this debt is vicious. At a rate of, say, 2% a month, the bank is adding interest to your new, growing debt every single day that you carry a balance. Before you know it, most of your future leaves are just getting swallowed up by that interest, trapping you in a compounding cycle that is incredibly hard to climb out of.
Okay, Section 2, Investing, Crypto, and Bubbles. Simply hoarding your leaves isn't going to be enough, so let's see how monkeys try to actively grow their wealth and, well, the utter chaos that usually follows.
If we compare traditional monkey banks to the crypto ecosystem, we see some stark differences. Traditional banks use leaves. They have centralized control. They charge you fees for literally everything. And they allow the monkey government to print infinite leaves, which is a huge, constant inflation risk. But over in the crypto ecosystem, totally different game. Monkeys use bananas instead. Bananas are decentralized. They're tracked on a public block by banana miners. They trade incredibly fast internationally, and the supply is often mathematically limited, meaning it theoretically resists that central inflation. But let's be real. Crypto is highly volatile. If the traditional stock market is a smooth Sunday drive, crypto is a rocket-powered roller coaster. When monkeys see the value of crypto just climbing and climbing, they get severe FOMO. And this leads to a behavioral anomaly officially known as aping. Aping is when you just throw your leaves at a banana stock or a crypto token without doing a single shred of fundamental research. You're driven entirely by price momentum and this raw, primal desire for rapid gains. And as you can guess, aping often leads to massive hype trains and speculative frenzies. This is brilliantly illustrated by the recent AI bubble. We see this dynamic play out between passionate, real artist monkeys and what the community critically labels a goddamn AI slut bullbot. Critics will argue that these bot models produce fraudulent, poorly drawn art, often complete with, extra fingers. Yet, because of the overarching market hype, they still get showered with massive investments of leaves from big banana companies. It's a classic, textbook case of momentum and hype completely overshadowing intrinsic value. Whether we are talking about bananas, crypto, or AI, this hype inevitably leads to a financial bubble. And bubbles? They always follow these 4 exact stages. First, discovery. A new thing comes along and excites the monkeys.
Second, mania. Everyone starts buying in, convinced it's going to make them rich, which drives the price up to totally absurd levels, like 100 leaves for a single banana. This mania is usually supercharged by leverage, meaning monkeys are borrowing leaves from the bank just to invest more. But then, stage 3, panic. Suddenly, monkeys wake up and realize a banana is just a banana. It literally grows on trees. And finally, the crash. The price aggressively plummets to half a leaf, and all those leveraged monkeys lose absolutely everything, defaulting on their loans.
Which brings us to Section 3, inflation and supply shocks. Bubbles bursting are devastating, for sure. But what happens when the everyday cost of living just skyrockets? If you've ever wondered why your daily bananas cost way more leaves today than they used to, it almost always comes down to one of these 4 distinct engines of inflation. Demand pull happens when monkeys simply demand way more bananas than the farmers can actually grow. Cost push is when fewer bananas are available in the broader market for whatever reason. Production cost inflation kicks in when raw materials like banana seeds or fertilizer get more expensive, which forces the farmers to raise their prices. And finally, monetary inflation happens when the monkey government just prints too many leaves, directly eroding the purchasing power of the leaves that are already sitting in your pocket. This dynamic leads us straight into the rich monkey illusion, which perfectly captures the danger here. Your nominal wages might look fantastic on paper. You feel wealthy taking home 100 leaves. But if the prices at the banana store just surged by 20% and your wages didn't move at all, your real purchasing power has absolutely plummeted. You are effectively getting poorer every single month. And this often triggers a vicious wage price spiral. Monkeys go on strike for higher wages, and in response, the bosses just raise the price of bananas all over again to cover their inflated payroll. Sometimes, though, those big guerrilla corporations know that if they raise prices too high, the monkeys are going to riot. So to avoid the outrage, they use sneaky stealth tactics known as shrinkflation. Instead of outright charging you 2 leaves for a banana, they'll secretly sell you half a banana peel for 1 leaf. They'll shrink the packaging, use cheaper ingredients, like mixing in coconuts, or even just rebrand their leftovers as brand new products. You feel like you're paying the exact same amount of leaves, but you are extracting so much less value. Often, these crazy price hikes and cost-push inflation scenarios stem directly from geopolitics. Take global trade routing, for example. There is this incredibly narrow choke point heavily referenced in our sources called the Bendy Bit of Hormuz. It is a crucial waterway where 20% of global banana and oil exports pass through. If pirate monkeys or political conflicts suddenly block this tiny gap, those giant banana tankers stop moving. That one disruption spikes the cost of everything globally, from banana transportation to the actual monkey asphalt used on the roads. It's a massive, unavoidable domino effect. All right, our final section, Part 4, Surviving the Monkey Recession. Let's look at what actually happens when all these macroeconomic forces completely collide. We can see this play out perfectly in the timeline of the Great Monkey Depression. During the Roaring 20s, monkeys enjoyed this massive, easy credit boom. They were taking out loans to buy everything from radios to banana stocks. But they were massively over-leveraged. When reality finally hit on Black Tuesday in October 1929, the entire market crashed. Banks completely failed, life savings were wiped out overnight, and by 1933, the jungle saw a staggering 24.9% unemployment rate. It's a grim historical reminder of systemic risk and exactly what happens when an entire economy is built on over-leveraged leaves. Now, recessions are just an inevitable part of the cyclical nature of the jungle, but the source material leaves us with some highly practical, rock-solid steps to survive the crash. First, save an emergency fund of 3 to 6 months of leaves. Second, aggressively pay off that compounding leaf card debt we talked about earlier. Third, cut your unnecessary expenses. And finally, when you do invest, don't just ape into risky bubbles. Instead, dollar cost average, meaning consistently invest small amounts over time into diverse, low-risk, A-tier index funds. You see, economics really doesn't have to be this intimidating academic thing. At the end of the day, it's just the study of how monkeys trade leaves for bananas. But make no mistake, the stakes are very real. I'm going to leave you with this final thought to ponder as you navigate your own economic journey out there in the wild. When the next financial bubble inevitably bursts, will you be left holding a pile of completely overpriced bananas, or will you have safely invested enough to actually survive the jungle? Thanks for joining me on this explainer, and remember, apes together, strong.